Almost through the first quarter of 2015, we've seen deals continue to proliferate the headlines as private equity firms and strategics are getting in on the action. I'm Michael Brown, senior reporter with The Deal, and I'm joined today by Todd Schwartz of Hastings to discuss the trend. So Todd, we've seen valuations up in 2014 and now continued through 2015. What are you seeing out there in terms of valuations?
Yeah, I think provided the stock market trends can continue upward, the valuations are going to follow, particularly because the strategics can leverage both their cash on hand and the stocks and their stock value to make acquisitions.
Okay. And now with that sort of strategic power, where is that driving private equity into any particular types of deals?
Sure. So what we're seeing recently is private equity funds targeting carve-out opportunities. You have these large companies with perhaps underperforming divisions that they need to get rid of. And we see a lot of private equity funds targeting those as really good opportunities. It fits in their wheelhouse for potential restructuring scenarios.
Right, and so those would be more or less middle market transactions, perhaps the carve-outs. The middle market has been very busy as well. How has private equity kind of fared in the middle market?
Yeah, I think there's definitely been a lot of competition as the number of deals, particularly in the distress space, has remained low. It's really driven a lot of competition.
Mm-hmm. Okay. Now, is there any particular place that PE is going to find deals?
Well, I think what we're seeing a lot is PE funds being active in the distressed investing, getting refinancing loans or getting involved in financing deals with distressed companies that they can really use that to get a foothold into acquiring the company in the future.
Okay, and now how would that play out? Would that be, taking them and being a creditor with them, during the distress process or in a bankruptcy process where they have kind of a leg up in an auction, or how are you viewing that?
Yeah, that's right. I think when we see these deals, we have private equity funds that are really, not interested in participating in the auction process given the competitive nature of the market. And so they go into the deals providing financing to get a foothold in the door, maybe drive the process a little bit more towards their favor.
Right, and really putting them in the driver's seat and helping them avoid those expensive strategic auctions.
That's right.
That's right. All right, well, thank you so much, Todd. I appreciate it.
Thank you.
All right, I'm Michael Brown, senior reporter with The Deal, and that's The Deal Report.